Hello, today is August 11th, 2018. On Thursday, I made no call. The reason was I was looking for this high of Wednesday to hold Thursday. It fell by a few pennies, and I was looking for a big drop Thursday. It didn't happen, at least by Thursday's close. Now, Friday's open is a surrogate for Thursday's close, so I guess you could say it did work, but when I look for a big drop and it doesn't happen, the next most likely alternative is a sharp gap in the other direction going over all these highs. And my trading philosophy is I'd rather miss a move than risk the loss of that magnitude with an overnight hold. So we didn't have any call. We said during the week that even though this wasn't my favorite candidate for a high, it was a candidate. It was possible. And the question is this enough to seal the deal? Well, let's go over what the indicators are. We had a target from August 3rd. We hit it almost right on the nose at the open. There was certainly a tradable rally after that hit, so it had validity. We'll just cross this off the list. We have mixed signals, and when that happens, the commonest thing is you have a gap and a quick move outside the day's range. Next most common, which I don't think we'll see as we close, it'll change, have the big move Tuesday, and the least most common, which I really don't think we'll see, is that neither one of those things happen. I think we're going to gap outside the range, and I think it's going to be telling. So let's go over what could happen. Here are the MEJT signals. On Friday, here it said ultimately higher prices would print, which they did. Here it said ultimately lower prices would print. They did, but it says the move is false, and we give a target of 28.3781, most likely by Monday's close. Now we came close. We came up to 28.3760. It's awfully close, but it's not within the tolerance of the system. It's so close, and the reversal from that level was so crisp that we at least have to entertain the possibility that we're going to have a failed target at a major change in trend, which is a characteristic of the system. We had been looking for this pattern to complete, which would mean a few more rally days. There's no law that says it has to, and there's no law that says it has to start from right here. There's no law that says the pattern has to go to completion. Well, here's what's good about the pattern. Gap down, hit some new lows. We couldn't close under any of them, so these new lows were rejected. It's a positive pattern, should lead to higher prices. We also have a higher target. We also have a pattern which almost always closes near the high of the day, particularly when this high is higher than this high. It didn't, and it's negative if it doesn't, but remember Monday's open's a surrogate for Friday's close. So there's a likelihood that the gap outside the range is going to be higher. If it's not, it's real trouble. When this pattern doesn't lead to a new high at the close, or at least the following day's open, it typically leads to much lower prices. Now, when you don't get the rally, it typically is a lightning bolt down. I guess you could interpret it as this, but I think it's also possible to interpret it as a pattern which leads to a zoom at the open. We were looking for a bit higher prices so we could trade over the line by 317 points. We came within 1%, and with moves of this magnitude, that certainly may be enough. If we did have a gap under this low, it's pretty tough for me to see how we could get a recovery. And I would say the high is in. Instead of putting it in pencil, I put it in erasable ink. But if we gapped up here, you wouldn't get the confirmation of this break. Confirmation means you have to trade by at least a penny under Friday's close and ideally close under this low. If this is the end of the pattern, we have the kind of Fibonacci relationships which one expects to see. We have A equal to C and wave C and A having a Fibonacci relationship. You also have this being wave 1 and wave 2 correcting almost all of wave 1. If we gap under this low, I would expect us to be in wave blue 3 down. If we are in wave blue 3 down, I like this wave to be impulsive. It's pretty hard for me to count this. I've seen people call this horizontal move a diagonal triangle. I didn't look like a triangle to me, but I guess it doesn't break any rules. And I'm not certain if this is the count at all. Looks a bit forced to me. But if that's a 1 and that's a 2, you can count this as a 3. Certainly looks like a third wave. And if that's 4, you can get wave 5 with some pretty keen Fibonacci relationships. It would imply that that's A, and if B ended here, and you gap up, you could look for C equal to A around 2843.5, which would be about 50% retracement of wave green 3. If we gap up over the highs with a pattern which should have an early low and doesn't preclude gapping higher first, I would look for a gap over these highs to around 2843.5 cash. And after consolidating here for a little bit, that could be the end of this ABC up, and there should be a retracement, typically down into the bottom of the first hour of trading, if that's the count. But what if it isn't? What if, instead of that being 4 and this being 5, what if instead of a 5-wave pattern, it's actually a 3-wave pattern? This could be A, B, C, and wave C is equal to twice wave A. If that's true, then we're in wave 5 down. And what's interesting is if that's the end right here, it's right at the Fibonacci retracement, 61.8% of the way of this last rally up. So if we gap down instead of up, that's a perfectly logical place, and we're going to be in wave 5 down, which should be impulsive. So I think Monday's open is going to be critical. I really think I think we're going to have a gap outside the day's range. I think the odds favor by more than 50%. The odds favor the gap being higher over this high with a resistance area around 2843.5 followed by a retracement. But if the gap is under this low instead, I think it pretty much seals the high, and we're at a big impulsive move down with much lower targets. And that's today's call.